teardrops. Now that you got me started, I just can't stop. No, no. 'Cause I love you, baby. I can't let you go, baby. I gotta tell you that I won't. I've been looking for love so true. When I was down and out, along came you. Though you might be a liar and a cheat too, I just can't quit you now 'cause I love you. Yes, I do. I can't let you go, baby. I can't let you go, baby. 'Cause I love you, I love you, I love you. No, 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 no. Cause I love you, baby. No, 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 no. Can't let you go. 'Cause I love you, 'cause I love you, yeah. There was a time I didn't have romance, but after I met you, I felt it was my chance. But nobody tells me good things about you, baby. I'm gonna stay right here, and I don't mean maybe. Yeah. I can't let you go. I can't let you go. Yeah. I can't let you go. Yeah. I can't let. I can't let. I can't let. Yeah. I can't let. I can't let. Yeah. You can't tell me to let go, baby. 'Cause I love you. I love you. Yeah. 'Cause I love you. Yeah. I can't let you go, baby. I just wanna tell you that. No, 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 no. Yeah. All of my friends say, girl, you better take care. 'Cause that man is trouble, you best beware. And though deep down, I know I might be headed for teardrops. Now that you got me started, I just can't stop. No, no. 'Cause I love you, baby. I can't let you go, baby. I gotta tell you that I won't. I've been looking for love so true. When I was down and out, along came you.
There we go. Hey everybody, hope you guys are all doing okay. Let me move some stuff around on my part because I am going to be putting CNBC up here very fast. So let me just do one thing and add a window capture here. But before that, exit out of that, let's add one more window capture. And let's go to, there we go, add source, add new source instead. And we want to have this be CNBC like that. And then for now, let me pause this here. We don't really need to see that yet. I want to make sure I don't get in any trouble with YouTube here. Let me just break that down here bit by bit. Close that down. Close that down. And then over the next few minutes, in the next, 24 minutes or so, we should have the announcement here. And then we'll put it up and we'll see what the news has to say. And then a half an hour from there, we're going to have Jerome Powell doing his press conference at 2:30 p.m. Eastern Time. The announcement, though, comes at 2 o'clock Eastern Time, so 11 o'clock here. All right. Let me move some stuff down here as well. There we go. All right. Excuse me, guys. And hey, Bobby. Hey, everybody. Hey, Monica. Hey, Matthew. Hey, Hoot Johnson. Hey, DeFi Al. Hello, Mike. I think we deserve a small pop at least for stocks and crypto. Anyone else see how well Sol is holding up, looking tempting to add more to my long-term bag? We are due for a pop pretty soon. It might be after this next drop, though. Remember, guys, as far as those support levels, do I have all of them here? We found support last night here or actually a few minutes ago, at the 4-to-1 Ganfin level, and right below that there's going to be a 3-to-1 Ganfin level going on the 45-degree direction. This is our support level that I'm looking at right now. If I were to zoom out on this one a little bit more as we kind of watch all this price action going on, because Bitcoin is not going the way of the market right now, as you guys can kind of clearly see. Ethereum is down 10%. That's 4% more down than Bitcoin itself, and even like Dogecoin and stuff like that. Let me go over here to Coinbase. Let me pop that one back over here. Let's go back to a weekly chart. Oops. All right, so again, something weird is going on here with TradingView. There's some type of glitch. The weekly candles don't look like that. But if we go back to the daily chart right here, our next level of support, if we break down below this $20,000 range, is going to be somewhere down here at 17,682. And I can clearly see, well, not clearly, but I can easily see if we break down below here, we're not going to go much down below 17,000, at least for this week. We would have another chance of consolidating. And then from there, we'll find some type of pattern to either break out of or some type of pattern to break down out of. And that'd be the big move to be watching for the next few weeks here. But for now, we're holding support. It doesn't look like we want to hold that support here because Bitcoin keeps on coming down and breaking down to a new low, a new low, and a new low. We're going to have to take a second here to figure out our bearings and figure out if we manage to break down below this level, or if there's any other Fibonacci levels we might have to keep track of. Because right now, depending on how you do these charts here, let me show you something. Probably best to start off here. No, that's not the right one. Where's the retracements there? Actually, better yet, we're looking at a more macro scale right now. Let me cheat myself a little, give myself a little bit of help and go to the monthly chart. Okay. One there. Another one there. But this one, we turn the fib levels off. Then we have another one here. Then we have another one here as well. But this one we want the fibs on. Let's go back a little bit more. Want that one there. Then we want another one there. Oh, shit. We just need to go over here very fast. Okay, one of those should do the trick. Okay. So now, I put on 6 different Fibonacci levels off of 3 different three different lows. The only exception for those 3 versus the other 3 are going to be some have log-based scales on, some have log-based Fibonacci levels off. Okay, that's the only big difference here. So if we go over here to the day chart now, you're going to see a lot of lines, and I'm sorry. But you can see how there's pretty much just a gap right here. That's the point. So if we start breaking down below these Ganfin levels right here, that's where we start to see some issues. And then we have one little sub-level of support, looks like right here, $18,000, actually $19,000. So I would say if we break 19,000 right here, oh, actually wrong chart, right around here, we're going to start to get a little bit more of a cluster effect, which will slow it'll slow us from falling, basically. There is so much support right here. It's going to take a while for us to break down below it. And look at the support. I mean, Fibonacci levels, Ganfin levels, everything you guys can imagine, it's all here to kind of support Bitcoin. Now, if we fall below this is where things can get really nasty. But right now, this is the perceived bottom for the market if it wants to, in the short term at least here. If things get really, really bad, we'll have to see. But you can see the lowest Fibonacci level right here is around 14,600. For me right now, that's as bad as I think it'll get over the next few weeks. If we somehow get worse than that, I think it would be not because just of the technicals of Bitcoin. It would have to be because of something going on with a major exchange, like the Celsius that caused the last drop here, or the Luna that caused the drop before that. Those are the type of big events that would have to happen to really get Bitcoin tanking in. Because if we start going back down to here, then we're going back down to pre-COVID levels here, which could be for the inexperienced investor, they may really just start to freak out, and panic. And who can blame them? Because nobody would have ever thought Bitcoin can go this low because everybody kept on thinking the economy was just going to be raring to go continually here, okay? So I'll leave this up here for a little bit of time. We'll come back to it. But I want you guys to understand that's what's kind of happening right now. And those are our support levels over the next few minutes here. And, of course, we already broke down the new lows for the month. Let me readjust that here. Here are the new lows. We still have yet to break out, and we've been trying for a while. So if we're continuing to grind, the hope that we're going to have for the opposite side not being falling down is we want to see a breakout, and we want to surge above this Fibonacci level here from 2018 lows to now, and this other Fibonacci level similar to what the other one was about the lows of 2018. So we really want to get back above like $23,000, frankly, if you guys want to have some type of short market rally where everything's looking good, altcoins are popping off, etc. It's just going to be a big risk, and if you guys want to buy anything, it might be better just to wait for a breakout here, because that would at least show we're breaking down out of this downtrend, not maybe going up, but at least going sideways with the opportunity to go up over the next few days. That'd be the hope here. And what I'm going to do right here as well, you're going to hear something noise in the back for a second. Oh, I can actually stop that from happening, can't I? I'm just going to mute the CNBC video. It's loading right here for me. So a fatal error occurred. Oh no! But basically, guys, when they announce rate hikes in about 17 minutes, I'll pull it up. We'll listen to what they have to say, and then about a half an hour after they announce that information, we're gonna have Jerome Powell come out, and we will be watching the entire press conference that he has. And how can I do this? It still says it's messing up, so I don't know if that's something on my part. Oh, there we go. It fixed itself. Okay. Let me just do a quick little test here, and you guys can't hear it. Perfect. Okay, there you go. I don't want to get in trouble with YouTube here. Oh yeah, and for all of you guys that are watching me from work or wherever you guys are, I know the numbers are usually lower in the middle of the day because everybody has a job. So thank you guys for watching. I really, really do appreciate that. And let me make sure that I'm missing thing. What's right here? And hey, Mukesh, if in case the interest rate hike is 1%, I really want them to do a 1% rate hike. I personally would like that. Guys, as bad as the market is right now, it will recover, but we're kind of in this, we have to decide if we're going to rip the Band-Aid off, get the pain over with now, or if we're going to slowly grind into the pain being painful while we're grinding into it, the real pain, and then we have to deal with that, then get back up to the normal economy levels that we all like, with the good stuff here. We still have to wait a while before things get back to normal, but at least we can find a leveling off point. So, if you go back in time with Bitcoin here on this weekly chart, we can just use a weekly chart. After we find a bottom normally in these normal market cycles, not during COVID drops, we do tend to just find a bottom and we just kind of consolidate for a while. We do nothing. It gets really boring. But, even the last crypto winter, I guess that people call stuff like this, where after we had a flat out crash, and we've already had the crash here, or a crash, we consolidated for about 126 days. From the all-time highs to when we had our first initial crash, that was about 413 days. Well, at this point in time, guys, since our initial crash back over here, you could say, or even here, we'll just do this one first, it's already been 147 days, right? So, unless the economy is so absolutely bad because Biden can't get gas prices under control by, kowtowing to either Saudi Arabia or the gas and fuel industry, that's what's most likely to tip us over the edge here. I think because we're a democracy, I think if enough people say, Biden, we know you don't like oil corporations, but please, 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 just let the oil corporations build a couple more refineries, even though it's not eco-friendly, so we can have cheaper gas, let them pump more oil, etc., etc. That may be the thing that really helps us get out of this faster. But Jerome Powell has no control over the gas and oil industry. He has no control over talking to Saudi Arabia to getting oil, more oils per barrel, more daily barrels uplifted, right? So call Joe Biden and tell him to do this, okay? Whether you like him or hate him, it does not matter. But this is one of the most important things he can do to really help the economy out, and he's not taking this step because of politics. And again, I don't care about your politics, guys, but really, from a practical standpoint, this would be freaking great, and it would help him out in the long term, I believe, even if his base doesn't like him as much. What are they going to do, vote Republican? No. So, he has to be able to do something really bold, transformative, whatever you want to call it, in order to get gas prices back down. And at this point in time, he's not taking those steps that we need him to take. But maybe he will the closer we get to Election Day. Perhaps him doing that may help us out. Because remember, guys, the oil markets are going up and down off of perceived factors in the future. So if he says we're going to do a lot, as much as we can to increase the supply of oil, that should drive down prices. That's what we're going to be hoping for going forward. That's the good stuff that we need to, lower the cost of fuel, etc., etc., etc. Plus the refinery. We need like one or two more refineries here on the East Coast or the maybe Central America, center of America, to really get things going for us here. It's unfortunate, but that's what needs to happen. It's from a practical standpoint. So, whenever you hear a politician left or right saying there's nothing they can do, there is stuff we can do. It's just not politically acceptable to a certain degree, okay? So if I hear him do one of those things, I'm going to turn very bullish very fast. Not necessarily, I'm going to be buying up everything I see, but I can start to see the light at the end of the tunnel. Because right now, we see like a very teeny light, but you can barely see it. If we want to see the actual light coming in the tunnel, and that would happen because of higher rate hikes slowing down the economy, and Biden going to both Saudi Arabia and to the oil executives, the big dogs, and hashing out some type of deal. I don't even care what the deal is. They have us bent over a barrel right now. So we're going to have to wait to see how all that pans out. And happy to see everybody back here today, guys. Thanks for watching. And hey, Ken, so did all Rami Rome drop the ball lately? What is Rami Rome? I don't even know what that is. But hey, Ken. And hey, Omar, happy to see you back. And what's right here? What would the level where we are 80% seeing 13,000 Bitcoin? Thank you. Oh, you mean 80% down from where Bitcoin's all-time highs? Here. Oh, this is a 4. Let me go to the weekly. You're talking about... We're currently 70. 80 would be down here at 16,000, I believe, or 15,000. No, 14,500. Kind of going up to the Fibonacci levels we talked about. No, not Gan. The Ganfin levels over here, and also the Ganfin levels. No, it's 18,000. Where are we looking at here? What was it? Fibonacci levels. Yeah, well. Again, ignore this glitch that TradingView has with these 2 weekly candles. 17, right around here, at the bottom of these Fibonacci levels right here, plus these 2 Ganfin levels. That's what we would stop at if we went down 80% on this Bitcoin cycle like we have many times before. Let's move that back up here. Let's move that to a 1-minute chart. And there you go. Patiently just waiting right now, guys, for that big Federal Reserve decision. I'm looking on CNBC. I see a commercial. It's nothing really fancy happening, so we'll wait. But the moment they do it, you guys will see it up on the top of your screen, and we'll be ready to go here. Let me do one more thing on my part. I need to add a desk pin. There we go. Hope you guys all had a good night. I'm thinking of streaming more later at night, too, for you guys. So, I normally do the streams 6 to 8. I might start a stream like maybe Mondays, Wednesdays, and Fridays. I stream from 6 to 12 or something like that, 4-hour stream. I think that'd be pretty nice, and I just sleep in the next morning. Oh, excuse me. Whew, taking too much water now these days. Hey, and hey, you're watching. I appreciate it, man. Thank you very, very much for watching. And hey, Byford. Hey there, Michael. Leaving the office to head home so I can watch you live in Fox Business. Fingers crossed. Yeah, guys. It's going to be a fun time. It's going to be a really fun time to watch to see how this market reacts to all this information. Right now, we're kind of in a cooling period. I should probably open up the major indexes so you can see the difference here. NASDAQ. Let's move this out of the way. What's the best way to look at these here? There you go. We see the NASDAQ popped up a little bit right here on the daily chart. You're not going to really notice too much because we haven't done anything today. You'll see it's just been pretty much of an unch day. But going over here to the... this is Bitcoin. Where is the... SPY? There we go. Let's go to the daily, not the monthly. SPY is down just a tad right now. And then, of course, we have Dow Jones Industrial, also down just a tad. Actually, this is having more trouble breaking back above its resistance than the NASDAQ. At least the NASDAQ was able to pop back above that 200 weekly exponential moving average. The Dow and the S&P are not having as much luck there. But at least they're up from where we closed yesterday, right? So even though it's a red candle, we still are up relative to where we were yesterday. Let's look at the 15-minute chart here. Yeah, we want to break out above that. We don't really have a support leg to stand on right now besides some basic fibs, but that's not going to do us much good. Let me go over here to the 4-hour here. Or should be 15-minute chart here. Yeah, same concept. We all had our little peaks for the highs for the day, and we're just consolidating, waiting for some type of breakout here. Maybe this one could be construed more as a flag, more as a bullish pattern here for the SPY, right? Or a falling wedge, perhaps. We break out above those quite regularly. about like 80% of the time. Who knows what happens afterwards though? And the Fed decision I'm looking on CNBC comes out in 8 minutes, guys. 8 minutes and 54 seconds. So, and then 15 for the Nasdaq. Nasdaq's actually doing something different here, so you can see that it's not going down. So actually, we're just consolidating right now. So what I'll probably do is I'll put all of these on a 1 minute chart. Why isn't the RSI on this one? There you go. And then we'll be looking at this at the same time we watch Bitcoin's price as well, so we have a good idea of what's going on. And I should probably make this more precise here, shouldn't I? No, we don't have to worry about it right now. Yeah, it works best if everything's precise. There you go. And we even broke above that and still fell down. So yeah, this is a little bit more of a trickier market here. But I guess that was only on the 1 minute chart. All right, that's gonna look very weird. Perhaps it would be better to have it like this. Maybe it would be better to get rid of all the RSIs actually here. That's probably why I had the RSIs off. All right, auto, auto. I should probably widen this out, but I don't want to do that right now. Okay, and we're seeing Bitcoin take a little bit of a bounce here, guys. Making a move. There we are. Okay. And hey, user 7, Michael always grinding. Guys, it is my goal to make this channel a big success down the road, so I am going to be putting a lot of work into this. I decided this about 2 months ago. I was going to take a little bit less time trading in my average day because I've been trading these larger swings and still making money off it, and putting more of my time into the channel here to grow it and to, try to make this a business thing, because when I move to Nicaragua next year, I'm going to be still trading and stuff like that, making money. But I also want to try to find a way if I can just not basically live off of YouTube because I have the trading money, but have fun education, build a brand, kind of go do more fun stuff around, and kind of share that experience with other people. Because normally, guys, I'm not a people person. I'm not. I have lots of friends, I guess, around the world, and they're really fun and stuff like that. But I see Bitcoin going up. But normally, I'm a pretty much of a loner guy. I just happen to have lots of friends that I can always go hang out with when I travel across the place. I only have maybe a handful of friends in Washington State. The majority of my friends are like everywhere else. That's why I travel so much usually. But that's because I met them along my life and I'm still been friends with them. And here we go, guys. Bitcoin's having a nice surge right now. This is a pretty monster surge here. Is NASDAQ and stuff doing that as well? A little bit. We're having those breakouts that we talked about a few minutes ago. Except for the NASDAQ, because that didn't have a breakout spot. So we're seeing Bitcoin come up a little bit. You're seeing a big surge in altcoins as well. Let's just take a quick peek here at XRP, everything, STMX, SHIB, FTM. Everything's having a little bit of a surge right now. Everything. Anything not having a surge? Bitcoin Cash, DOT. Yep. You're seeing a nice solid surge from a bunch of coins right now, and that's nice. That's really, really nice right here. Let's see if we can have a bounce. And there we go. Again, Bitcoin just tapped on that level of resistance here. Are we going to be able to break out above it? Let me show you guys in the 1 hour chart here what I'm talking about. We just talked about this. If we want to have something good happen, we need to break out above it. We'll have to see. That was a pretty unorganic move, as you guys can probably tell. And we're also coming into contact with this Fibonacci level. This Fibonacci level is not the same as this Fibonacci level. I know they look similar, but they're not. But we want to be able to close above this one first, then this one, and then eventually that trend line right there. Hopefully we don't just continue to break down and we might have to consolidate a little bit more, but at least that means bulls are ready to try to push us up above this resistance level over the next few minutes with the Federal Reserve, et cetera, et cetera, et cetera. Hopefully we can try to do a little bit of a reversal here. With a caveat still that the Federal Reserve announcement could tank Bitcoin, but again, we're going to have to wait. Bulls are still in here though. Let me go over here very fast and where are we at? Whale trades. 1 minute ago, 5 million Bitcoin longed. 10 minutes ago, $4 million $4 million worth of Bitcoin longed. 35 minutes ago, Bitcoin longed. About an hour ago, we had some shorts coming in here, right? So you just saw some type of whale buying in some Bitcoin. Pretty nice little move. We'll have to see if they can save it from falling down even further, though, because they tried it here a couple days ago. Wasn't successful. So let's give it some time, everybody. And hey, Burke, is there a difference in the market between they announce and when they speak? Yes. When he announces, there's usually a bit more of a shock. When he speaks and he gives his press conference, everything seems to cool off a little bit before making a larger move in any other direction or in any direction here. And we have about 3 minutes left. I'm waiting. I'm looking at the big little calendar thing. You can see CNBC right there. Market's up a little bit. I'm waiting to see what he has to say here. Oh, and hey, Ken. Oh, Jerome Powell. Oh my gosh. Okay, I get it. I'm a little bit slow, guys. I'm not really cultured, as they as they say. And hi, Sci-Fi Move, my man. Welcome from Belgium, guys. I love this community. I love YouTube because I really do have people watching from around the world, and I really do enjoy them. And what's right here? And hey, a European Central Bank is also acting like everything is okay. Yeah, I saw the emergency meeting last night. I thought that was pretty interesting. Hey, no, boy. Nope. No. I'll give you a treat. I did see that because I was live around like midnight last night with you guys, and we saw that alert, and I was like, uh-oh. That's kind of a surprise, and Bitcoin dumped after that news, which was interesting, so the shorts took advantage of that. Let's see. And hey, Matthew, if only we could tell Saudi Arabia to cut the crap, or we stop selling them weapons, but that'd make the military contractors weapons. Yeah. I mean, yeah. There's a point to be made there. I don't think. I don't. Hello. You are going. Oh, I forgot. I didn't give him the treat. Here, say hi to Loki before I threaten him with a you know what. Here's a treat. You want to go take a bath? But no, it's a bath. Come on, bath. No, he's not even afraid anymore. He just hops down. You can see his little ears over there. He's trying to push my hand up here. Oh, you guys can't see it. But yeah, there we go. It's politics, guys. It's not a nice, clean process. It's really gritty. It's not really fair for the average person out there. But there are ways the world governments can try to fix this gas crisis. Maybe not the inflation crisis. Leave it up to the central banks and the Federal Reserves and stuff like that. But at least they can, they can deal with the gas problem. They can. It's just they need to have a little more of a stronger will. The one interesting thing here, guys, if you look at it, ADA is actually up for the day. You can see ADA having a little bit more of a surge right now. I don't know if it's a day trade or whatever, but everything on my screen is green or red except for ADA right now. So look at ADA on a 4-hour chart. Uh-oh. What did I do with ADA? There we go. It's been consolidating a lot better than Bitcoin here. It's trying to hold this Fibonacci level. Whether it does at the end of the week, we'll wait and have to see. Oh, and there we go. Fed decision imminent. Let's go back over here to the minute chart. Dumping again. We can actually go to the second chart here. And probably best to actually... I have it ready right here, guys. We're just going to be waiting to see what the announcement is. And then I'll keep the desktop audio volume on so you guys can hear what's going on. But I want to play it at the precise time so I don't get in trouble with YouTube here. And there we go. Dude, we got a whale battle going on right now. So we got dumped, then pumped. That's a little bit of reversal. And still getting rejected off with a freaking trend line. Just pushing up above it. There is a massive level of resistance up here stopping us from doing this. We can't even break above it on the second chart here. So the Fed decision is imminent. Watch this for a few seconds here. This is our freaking whiplash move. I'm wanting to play this video for you guys as soon as it pops up here. So Fed decision imminent. They're going to do that little box thing like that CNBC does, and then we'll see what goes on there. Okay, but this is a freaking wild ride right here. You don't normally see Bitcoin being this volatile, but everybody's really excited because everybody's placing the bets. Here we go.
Meantime, let's go to Steve Leisman with the Fed decision.
75 basis points. The Federal Reserve Open Market Committee raising the funds rate by 75 basis points to a new target range of 1.5 to 1.75%. First time they've done a 75 basis point rate increase since 1994. It plans to continue its plans to reduce the balance sheet as laid out in the prior month and anticipates additional increases in the funds rate. To wit, the new forecasts from the Federal Market Committee show that they see the rate outlook for 2022 at 3.4%. That's up from 1.9 pretty much meets where the market is. For 2023, it's boosted its own rate outlook, the median official, to 3.8% from 2.8%. That's a full percentage point increase.
At least they're giving
and
some
again,
guidance for us. This is
pretty
pretty
much
good.
meets where the market was at, maybe the market where the Fed was at. We don't know which way this works, but it is one of the most dramatic increases in the outlook, the near-term outlook for sure, of the funds rate that we have since we've been publishing this thing since 2011. The Fed repeating that inflation remains elevated. It sees the Ukraine war putting upward pressure on inflation. Says the China COVID situation, the lockdowns there are worsening supply chain
We're not even
problems.
barely moving right now, guys. We're in a pure battle right now. This is between whales. We're not even part of it.
In the first, obviously. It cut, however.
We're looking more like a breakdown, though. You can see how we're getting lower highs here. So we need to have a surge here if we want to make a move up. Otherwise, there we go. There's a little move up. But we want to break these higher lows here, or lower highs.
3.7%. But when you go out, they've raised it by a half a point in 2020.
Okay, that's all we need to care about there. Sorry, I have multiple headphones for different things here. I'm listening to smooth jazz in my head right now. There we go. All right, by Kenny G, one of my favorites. But okay, you can see we're slowly grinding down here. A wild move here, guys. A very, very wild move. I'm going to keep it on the seconds chart because this is some really crazy volatility. It looks like we're breaking down here. They can break the cycle, but there's going to need to be some type of big pop here on the seconds chart to really show, hey, longs are still active here, and we're not going to just fall like a rock here. There's a small one. There you go. So here. See, and hey, Miss K, happy to see you here. Right now on CNBC, they're just talking. They're just, everybody's giving their ideas of what this means. It's not going to be too crazy there. Let's see. And hey, Michael, you have some long setup for Bitcoin and Ethereum. There you go. Just remember, guys, if you guys are buying, it's going to be a long-term grind. But who would have thought last year you would have had a chance to buy Ethereum around $1,000? And guys, as Bitcoin goes down right here, Ethereum, $1,000 for Ethereum is right here. We're $72 away from breaking down Ethereum, breaking down below it. Okay, and you see Bitcoin coming back down here as well. You see the support level at 20,111. Wait for it. Yeah, man, we were just not having the best of times here. Okay, there you go. Hey, Matthew. Normally, the macro goes the opposite way of the initial pump, fake up, big down. Normally, we like to stabilize after we have this big move here. We're going to have to see if shorts can give up a little bit here, but what time is it? 11:05 my time. In 25 minutes, Jerome Powell comes out for his press conference. That's usually when we start to consolidate a little bit more. Normally, we just don't keep on dropping and dropping. Remember, we talked about this a little bit yesterday. If you guys wanted to day trade this, which I said is very, very risky, before the Federal Reserve announcement comes out, you would have wanted to short, and right after the announcement, you would have wanted to take your profits, a few minutes afterwards. It's been around a few minutes. You could still be holding the position if you wanted to, but you got to be very, very careful because what just happened here is a lot of people that were shorting, they just got, they might have been shorting here or here. They just got wrecked, and now there's new shorts coming back in to form new positions at this moment in time. And so far, guys, we're still coming down, it looks like. We're just going to be hoping the Federal Reserve can hurry up and get their butts out there to do that press conference. Oh, and they said the Federal Reserve is continuing to reduce their balance sheet. That's very, very good. That means they're still going to be selling assets, so that will be downward pressure on the market. However, in the long term, that would be very, very good for the economy because the Federal Reserve is not so levered up and bought up so many freaking assets they don't need to be having. And we have Ethereum at 168, still coming down here a little bit. Let's do a little bit of a recap here while you guys are watching the live price because we're very, very close here to the support levels. Oh wait, this isn't the right support level. Sorry for this one. A little bit off. That's an old support level. There we go. We might even bounce off of it though. Probably best to go back over here to 50. Now we can leave this here. All right, there we go. Want to make sure you guys have the proper lines on both charts here. All right. And the Fed anticipates additional increases in funds rates. That's good. That means they're taking inflation more seriously now. And hey, Michael, whales messing with people. That's what they do, guys. That's what they do. And look at it. We're still coming down here pretty heavily. There you go. And again, once the news conference starts, I will talk a little bit with it, but we'll mostly be just listening to Jerome Powell here, and I think that's going to be for the best here. And if any of you guys have any questions of what he's saying, what stuff he says means, I will type it down for you guys if I don't want to interrupt what he's saying. And hey, Finding Gura, Loki, I know, hi Loki, he's somewhere now. He likes to get a tree and just runs away. He likes saying hi to everybody on the stream. Fred Rugpull, oh my gosh, yeah. And hey, No Tacos No Life, happy to see you back, my man. I hope all is good. So far, Bitcoin's not looking so good. However, I'm doing pretty good. I just spent most of the morning out here playing with Loki and washing my face because my face had so much pollen on it from outside. Let's see. And hey, Jeff, overall market is dumping. Yeah, let's take a quick look over here at the NASDAQ. All had a little bit of a pop, more traditional, good news, then downward movement here. Bitcoin just had a little bit of a pop, but it is pretty much crashed afterwards. So what we normally look at here is the NASDAQ, of course. So let's take a peek at that. Let's put top. Oh, I took the RSI off, didn't I? Probably best to go to the 4-hour chart here. You can see we're still moving down, but overall, guys, the market is still positive, even if it's just by a little bit here. We'll have to wait a little bit longer. The Dow is up $5, $1, $5, yeah, back to $5. We're up 0.02%. The SPY is up 0.3%, and the Nasdaq is up 0.8%. So we're still green for the day, but we've given up a lot of the gains we made throughout the first few minutes of the day. And you know, if you guys look at the 15-minute chart, which we were talking about, well, not for the Nasdaq, but for everything else, you know, we moved up. We even broke out, and there was a false breaker because we just got slammed back down. So fun times ahead for everybody. However, the NASDAQ looks to be trying to hold on to the 200 weekly moving average. I'll be looking to see how that pans out. Is this the weekly or just the, yeah, the 200 weekly exponential moving average here. So that'd be nice. And Bitcoin's found a little bit of support. Still grinding down, having a minor breakout above this trend line that you guys can see right here. We'll see if it actually goes anywhere, though, because it is just a second chart. There we go. A little breakout. We'll take it. And the boost 2020 Fed outlook to 3.4%. Not bad, guys. It's not bad news. This is actually good. Let's see. Hey, Axel. China is in a revolution. If China is in a revolution, that'd be disastrous for the American economy. We require China. Like, you know how much labor in China is dedicated just to making American goods? A lot. That'd be a really bad sign for us if they were going through something like that. Let's see. And hey, you're watching, and hey, Haram. Hey, Mike, what time does the meeting start? It starts in about 20 minutes at 11:30 p.m. Pacific time or 2:30 p.m. Eastern time. We've already had the decision. It just got laid out 10 minutes ago. Now what we're waiting for is for the press conference where Jerome Powell will give his statement, and then after that, he's going to take questions from the media. And those questions will usually move the market one way or the other, and that's what everybody's getting ready for. So anybody that's taking a position right now, usually by the time he starts talking, people cool off a little bit and wait for the questions, because the questions and the way he answers them can move the market up or down. But we still have another 20 minutes of big market moves before that actually occurs. Excuse me, guys. Oh, my back just popped. Ow. All right. And hey, you're watching How's Bitcoin Whale number 3. Yeah, I just checked on him before the stream. He hasn't done anything. He or she hasn't done anything yet. There we go. I'm going to try to talk slower for the next few minutes, guys. Bear with me. So we know he sold 500 Bitcoin a couple days before we crashed. But since then, he's bought in 425 Bitcoin a couple days ago. And then yesterday, he bought up 488 Bitcoin. So still buying up a lot of Bitcoin here. We're trying to level off here, but man, this is just making it harder and harder. Because overall shorts are still pushing us down. If we were to go over here to whale trades. There we go. 8 minutes ago, 5 million Bitcoin shorted, or $5 million worth of Bitcoin shorted. 10 minutes ago, another $5 million worth of Bitcoin shorted. Bitcoin long 10 minutes ago. That was right before that. That's the spike you guys saw way over here. All this crazy volatility. That was that. And so far, shorts have taken full control over this. We're going to see how much more they grind us down. Oh, Fed says economic activity picked up in Q2. That is good news. That means we're it means we're not slowing down as much. That's bad for inflation, but for like jobs and stuff like that, it's good that people are still spending money, they're still buying stuff and so forth here. And hey, babyfish skull face, I know, right? What a dump. And what's right here? And hey, Toffs, happy to see you back, man. Part of the movie Death Before Rebirth. I mean, there is. I was talking about this with Babyfish earlier, and he was telling me, there are a lot of coins out there. I think a lot of you guys agree with this, that are flat out just they're worthless. And so we do need a lot of those coins to go away, so all of those resources, all that money, can go back to those other coins. Unfortunately, I think that a lot of retail traders will lose by buying tons of crap coins. And so the people that are making money off of those coins will be the rich people who built up those coins in the first place. And they're the capital that's going to be pushing Bitcoin up in the future. But we'll have to see how many people, how much money is actually left in this really bad, crappy coin market. So if we go, while Bitcoin's consolidating here, we'll come back to it in a second. As we go over to, I don't know, let's see if I can go. Actually, let's just do this. Add a filter. Actually, let me see how I want to do this. I might actually just show you guys all the information here. 8. I just wish they had a number thing we could type in the number you wanted to go to. What we're aiming for is less than $1 million. We're getting very close though. 14. 15. Okay. Yeah, we're getting close to under $1 million. A lot of these coins, so like pretty much from like the 1200 mark on probably onwards, a lot of these coins are going to go away forever. There will be new crappy coins that get put out over time. That's fine. It's just part of the system. But a lot of these coins, down like 99% since this year alone, down 91%. A lot of these coins, as Bitcoin continues to go down further, a lot of them will go away. If they have a good social media following, there's a good chance that they come back in time. But, they're going to need a solid community around the coin to survive here. And perhaps the people that run these coins will have to give a lot of their shares away to keep people interested in holding on. That way, when the market does pick up, they're going to be able to, sell off at high prices like everybody else. But they're going to have to be able to build some type of optimism around the coin because there's just too many of them. I mean, I've never even heard of Bismuth, Wall Street Games, ShopX. I don't know what these coins are. $700,000 market cap. ShopX, well, we just talked about that one. Handy, CTI. I don't know what these coins are. Autobahn Network, Polytrade. Is this an exchange? If it's an exchange, I would actually buy this coin as a YOLO. But that's just me. Why aren't you working? My internet's been so bad lately. Okay, still consolidating though, guys. I just want to check out this Polynix one. Up a little bit today. Wow, that's weird. Okay, cool. Let's see. Let me add a coin market cap though as well. I'll wait for it to load. We're still about 15 minutes away from Jerome Powell talking though. We just closed the 15-minute candle as well. Let's see if we can have some type of rebound here. We're going to see if shorts start to exit. Awarded Best Institution of the Year by Governor of Maharashtra. I can't pronounce that, sorry, but in India. Decent website. Oh, it's an app. Oh, okay. Let me do this. I'm gonna bookmark this. I want to talk about it a little bit later. Or not talk about it, but I also want to look it up a little bit later. Where do bookmark this tab? There we go. I'll put Investopedia tab there. That's fine. All right. I'm looking one up. I'm a sucker for exchange tokens or tokens that go with trading platforms because usually they survive these markets a little bit better than others, and I haven't come across that one before. All right. And hey, Byford, home Bitcoin isn't liking it. No, not liking it at all. But we should consolidate. Normally, we don't keep on dropping at least or making a choice here until Jerome Powell speaks. The same thing happens in the forex markets all the time. Maybe while we do this, I can show you guys on the NASDAQ chart right here. Let me pull this up. Maybe euro to the USD. I wonder if Xfinity is having lag issues again. This is annoying. You see, this is more traditional. You short on the announcement, right? And then once you find the bottom, you finally usually have one green candle. And then from there, you sell your position around here. And then you start riding it back up and you just do the reversal. And it normally levels out by the time Jerome Powell speaks. But actually, we're going a little bit faster than normal. We didn't even take as big of a dip as I thought we might. But you can see, you got to time it to when the news is coming out. So you could short it here, right? And you have to be willing to hold through this spike here. This is always the hardest part as we short. And then you take your profit somewhere down here. And that's usually the name of the game for Forex trading when you do the Federal Reserve announcements. If we were going down, lowering the rate hikes, it's just flipped, right? So you long and then you short. Easy money in the Forex markets, but I know not all of you guys have access to Forex trading. I think the easiest way to do it is get access through TD Ameritrade. It's not hard, but you're going off of pips. You're not going off of actual money here, which is a little bit different. But usually this was the easiest amount of money I could ever find. It's just we don't we don't have rate hikes often or rate cuts often. So there's not usually this amount of easy money. Normally you're going after the grand scheme of things and looking at market conditions, and you're saying, hey, we broke down below here, I better open up a short, and you just got to hold on and wait a while, and it does individually pan out. But you can see the pound is just losing so much value against the dollar. The euro is losing so much value against the dollar. And I really want to stress this. All of you guys go to those exchange places when you guys go traveling abroad. At one point in 2008, if I went over to, or if a European came over here, the value of a euro would be worth $1.60, almost double. Now, now it's worth about even. Now it's €1 equals $1. So, interesting times. And we are at a level of support here. If we start breaking down below this, guys, that could mean that the dollar is more valuable than the euro. What the heck happened with the euro? What the heck happened to the pound? The dollar just is just flying like a rocket ship right now, guys. Just flying like a rocket ship. And we have Bitcoin consolidating, which is nice. Let me move this over to an hour chart so you can see what that looks like here. We broke down there. We talked about that a couple days ago. There we go. And now we're still trying to break out. We have a new bottom here, but we had a bottom here and we still broke down. We may have a bottom here. We may break down even more. I actually don't know what this orange line is here. What does this orange line represent? It's just a line. I think it's just a line. We don't need this orange line right here. There we go. Okay. And anything else? No. Treasuries are okay. Oh, 10 notes are going down, but that's fine. Actually, they're going up after a slow morning of going up. Okay, that's fine. Okie dokie. Let's watch this market play out here, but pretty soon, in about 10 minutes, Jerome Powell is going to be speaking. See. And hey, Deezer, happy to see you back, man. Dude, appreciate your wisdom. Oh, no worries, guys. I'm a little bit slow today because I've been streaming all week, quite a bit more than normal, but bear with me. There's some optimism here. As bad as everything is, there is still some optimism. We just want to find a pattern to be trading out of. Right now, we have a small pattern which could lead to some stuff, but if we do manage to dump over the next few days here, like going into the weekend, after we have that dump, we should have a pretty nice consolidation period where everybody's not freaking out and so forth. And then whether we break down or break out of that pattern, there'll be a lot of money to be made on that specific trade, because at this point, every single time we have a little bit more of a dump, right? People keep on thinking this is the bottom, this is the bottom, this is the bottom. And, you guys see me making fun of a lot of people on Twitter and TikTok saying, hey, this is the bottom, this is the bottom, this is the bottom. We can talk about the historical bottoms, sure, right? But when you look at it from a practical standpoint, that's why we've always had the caveat, hey, the 200 weekly moving average is the bottom that we normally see in these cycles. But right now, because the economy is so bad, there is still a good chance that it breaks down below. What I was wrong about is I thought we would break down below the 200 weekly moving average a lot slower, right? So I thought, we'd be waiting for the NASDAQ to be breaking down, the market to really turn into a bad spiral. No. Celsius locked all their accounts, and, the nail was in the coffin, so to speak, for trying to hold above that 200 weekly moving average. And I don't think, guys, so far, correct me if I'm wrong, Oh, I haven't had breakfast today. That was a mistake. They still have not fixed the problem. The last time they've messaged anybody was yesterday. Celsius is working around the clock for our community. No, they're not. It's all hands on deck, so there will be no Twitter Spaces this week. And we see, if you guys don't know what happened over here, which caused the last big crash, Celsius Network is pausing all withdrawals, swap, and transfers between accounts. Acting in the interest of our community is our top priority. No, it's not. Our operations continue, and we will continue to share information with the community more here. Right? So, a lot of people have leveraged longs right now that they're just trying to save, but because they cannot transfer money to help out those long positions, they're all getting liquidated, which means they're getting sold off, time after time after time. And hey, Zachar, definitely. I think during the Iraq War, the Canadian dollar got above the U.S. dollar. Yeah. Well, I remember when that happened. I live in Washington State, so there's a lot of Canadians that come down here. Our local news, King 5, they actually were asking people why are Canadians coming down here so much. It's like, everything is so much cheaper in the United States. Why would I, my dollar goes so much further here. Why would I not be spending it over here, et cetera, et cetera, et cetera. So it was a boon for the economy down here. And I wonder now if people will go up to Canada and buy up a whole bunch of cheap goods if we flip again down the road. That'd be very, very interesting. But I don't know what the Canadian dollar is worth right now compared to the American dollar. CAD. Oh, this is crypto, though. Not even going to try. My Wi-Fi is slowing down here a little bit. Again, I don't want to make a mistake like I did last time. Because then what I'll have to do is I'll have to switch over from my Ethernet. Because the landline is getting messed up from Xfinity for some reason over the past few days. And then I'll have to move over to my Wi-Fi, which may be a little more rougher on the upload speeds. Oh, Monica, oil is down? Where are we going over here? Watch list. Oil. Yeah, down 2%. This is a nice little move for the oil market. Yeah, a little bit of a tilt. We had one over here before grinding back up. We'll have to see if we're going to be breaking a longer trend, like this longer trend, or if we're just taking a little bit of a breather before we make another move up here. But so far, anytime oil comes down, that's a good thing for us, I would believe. What I'll do here very fast, though, is, boom. Back here to 1. National average is still at $5. Still at $5. It has not moved up anymore over the past few days. Let's see. Yeah, so we're down a teeny bit from yesterday, but still above from a week ago, still way above from a month ago, and way above from a year ago. Oh my gosh. What's diesel? What do you mean? Oh, diesel used to be so freaking cheap. Now it's not. My gosh, yeah. But I'm over here in Washington. Yeah, me. Could be worse. I could be in California, guys. California has that real expensive gas because they got more taxes, I think, than Washington. Washington State has 50-cent gas tax, so every gallon you're paying at 50 cents to the state. It's pretty rough, especially during these times. And hey, Zach, is it just me or do I see a falling wedge on the 1 hour time frame for Bitcoin USD? Yeah, I see it. You're talking about this right here? Yeah. So right now, that's a pattern. I'm thinking of us breaking out just on the upside of it. So yeah, you can think about that as well. It is a falling wedge. We should, in theory, break out above it. Right now, though, there's just a little bit more factors because of the Jerome Powell is about to speak. So he could easily tank the market if he wants to. But yes, if we break out above this pattern, we would at least have a stronger move, maybe back up to, how do we want to play this? 22,000, maybe as far as $23,000 would be some price targets that we would have. The white line is usually the first target. But because of how we need a little bit of a release here because we have so many shorts in the market, I could see us getting up to 23,000 bucks or so if we get lucky. Probably getting rejected around there, though, because that's where the Fibonacci level is, and we've had we've had trouble breaking above that specific Fibonacci level over the past few days here. But yeah, there is a falling wedge, nice catch. Move it back over here to the 1 second chart, patient this out. CNBC is still talking to random people. They're not doing anything of importance yet as far as Jerome Powell. We got about 3 minutes left, though, so he should be coming out. I see breaking news. Oh, no, it's just breaking news that somebody's talking. I don't know why people do that. And hey, V-Wade, you can always eat breakfast for lunch. I know, but I'm going to be streaming for a while. This will be a shorter stream compared to my normal ones, but I'll be back at 6 p.m. I'll probably make some eggs, toast, and ham. That's probably what I'll be eating. But that's what I've been eating for like the last few days for breakfast. I'm on a big diet here, so I have like, I'm losing like 2 pounds a week on average, like sometimes 3 pounds a week. But I'm really watching my food intake. But I had to eat healthy, which means a lot of eggs. Eggs with me usually works out pretty well. Because I can, like, I could say, hey, I want to eat 2 eggs today. Hey, I want to eat 3 eggs today. Ooh, if I want carbs for energy to go play with Loki, I'll have a slice of toast. I can control everything that way. And now a couple apps, I control my calories, which has been really nice. And hey, Bardis, we are doomed. I know, right? I know. Now that we've had the poll over here, I wonder if people are still voting on it right now. Looks like the majority was right at 0.75. That's what the news was reporting, so that's good to see. Let's see. And hey, Tommy, how low you think right now? Over the next few weeks, at the lowest I think I can see us going is around $14,500. But I think that might be a big grind. I think we would need some type of emergency to take us back down there. Like Luna caused one crash so far this year that made it worse than so. Guys, normally without the Luna debacle and the Celsius debacle, we would still be coming down, but not as fast and not by as much. Okay, because of those disasters, we've had these bigger drop-offs as people have been panicking. People have been doing mass sell-offs. Remember, if UST never depegged, then Luna wouldn't have had to sell all of its Bitcoin on the open market, tanking the price even further, right? So we would have had a crash, but it wouldn't have been as bad of a crash. Now, this last crash that we just had a few days ago, well, guess what? Celsius is locking accounts because people can't. How did I say this yesterday? Because the prices are going down, and there are a lot of people on the Celsius network that have longs right now. They're at risk of being liquidated once the margin price is reached, right? Liquidation price is reached. But because Celsius has locked all transfers between accounts, the people who have accounts on Celsius, they're unable to transfer new capital in there to cover to make sure they can keep on lowering that liquidation price. And because of that, the more we go down, the more people get liquidated over and over and over again. And there's no safety net for those investors because Celsius has said, hey, we're not going to allow you to even fund your accounts right now. We're not even going to allow you to transfer more money into your accounts. And if you have your whole position, which is kind of normal, you have all of your money tied up in one exchange. I don't recommend it, but people do it. How are you going to get out of that liquidation? You're not. So you lose all your money. All of those assets are sold off onto the market, whatever Bitcoin or whatever coin they were trading, leading to a more downward pressure on the coins, and that exacerbates all of this downward trends that we're seeing. So you're seeing it happen more and more and more and more, and it's unfortunate. Or on the other side, maybe they realize this, so instead of having their whole position lost, they just sell and take a big massive loss, also leading to the downward pressure of the market that we're seeing right now. It's unfortunate. But, we talk about them a lot these days, but if you guys have any money in here, or if you guys know anybody that has money in here, as soon as they allow you to, as soon as they stop the pause, I would sell all of my assets. I would get them out of the transfer, whatever, get as far away from that exchange as possible. That exchange is like a cancer right now on the market, and I'm not entirely sure if it's going to survive this bear market. And you've already been seeing reports like today, Tether has sold off all of its positions related to Celsius. They're not even bothering with that exchange anymore. They're out. And that's good for Tether. That's really good news for Tether. You don't want to see that spread and infect even more stable coins or other parts of the market. You don't want to see that happen. And, okay, it's 11:31. He's still not talking, guys. It's still some random guy on CNBC. We'll wait to see what happens. I'm sure he'll be coming up any minute, though. Sometimes he's just fashionably late, Mr. Jerome. And hey, Wilson, thank you very much. I appreciate it, man. I don't know. I washed my face today. Oh, here we go.
Strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high.
Shut.
Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 percentage point and anticipates that ongoing.
You'll see me moving it just because I don't want to get in trouble with YouTube using CNBC's video.
We are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply. As shown in our summary of economic projections, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth running below 2% through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024, levels that are noticeably above the March projections. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core prices rose 4.9%. In May, the 12-month change in the Consumer Price Index came in above expectations at 8.6%, and the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food and is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. FOMC participants have revised up their projections for inflation this year, particularly for total PCE inflation, given developments in food and energy prices. The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024. Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March, and 0.9 percentage point above the median estimate of its longer run value. The median projection rises further to 3.8% at the end of next year and declines to 3.4% in 2024, still above the median longer run value. Of course, these projections do not represent a committee plan or decision, and no one knows with any certainty where the economy will be a year or more from now. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can.
You're not missing anything on the screen right now.
Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
I'll turn it back on in a second.
Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Here we go, guys. This is the big stuff. About to break out.
Thank you. Howard Schneider.
We have
with
Fibonacci
Reuters.
level here, too.
Two related questions. Chair Powell, did you feel you boxed yourself in with the language you used at the last press conference on 50 basis point hikes in June and July?
It wants to pop.
And would you please give us as detailed a sense as you can of what role you played in reshaping market expectations so quickly on Monday?
There we go.
So, as you know, we always aim to provide as much clarity as we can about our policy intentions, subject to the inherent uncertainty in the economic outlook, because we think monetary policy is more effective when market participants understand how policy will evolve, when they understand our objective function, our reaction function. And in the current highly unusual circumstances with inflation well above our goal, we think it's helpful to provide even more clarity than usual, again, subject to uncertainty in the outlook. So, and I think over the course of this year, financial markets have responded and have generally shown that they understand the path we're laying out. Of course, it remains data dependent, and so that's what we generally think about guidance, and that's why we offer it. And of course, when I offered that guidance at the last meeting, I did say that it was subject to the economy performing about in line with expectations. I also said that if the economy performed, if data came in worse than expected, then we would consider moving even more aggressively. So we got the CPI data and also some data on inflation expectations late last week, and we thought for a while, and we thought, well, this is the appropriate thing to do. So then the question is, what do? And do you wait 6 weeks to do it at the next meeting? And I think the answer is that's not where we are with this. So we decided we needed to go ahead, and so we did. And that's really how we made the decision.
Okay, Gina?
Thanks for taking our question. Gina Smilik with the New York Times. I guess I wonder if you could describe for us a little bit how you're deciding how aggressive you need to be. So obviously 75 today. What did 75 achieve that 50 wouldn't have, and why not just go for a full percentage point at some point?
Sure. So if you take a step back, what we're looking for is compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in the form of a series of declining monthly inflation readings. That's what we're looking for. And by this point, we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline. We've said that we'd be data dependent, focused on incoming data, highly attentive to inflation risks, the things that I mentioned to Howard moments ago. So contrary to expectations, inflation again surprised to the upside. Some indicators of inflation expectations have risen, and projections of this year have moved up notably. So we thought that strong action was warranted at this meeting, and today we delivered that in the form of a 75 basis point rate hike, as I mentioned. So what was the point of it really is this. We've been moving rates up expeditiously to more normal levels. And over the course of the 7 months since we pivoted and began moving in this direction, we've seen financial conditions tighten, and appropriately so. But the federal funds rate, even after this move, is at 1.6%. So again, the committee is moving rates up expeditiously to more normal levels, and we came to the view that we'd like to do a little more front-end loading on that. So I think that the SEP gives you the levels that people think are appropriate at given points in time. This was really about the speed with which you would get there. So as I mentioned, we 75 basis points today. I said the next meeting could well be about a decision between 50 and 75. That would put us at the end of the July meeting, you know, in that range in that more normal range, and that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward. Just talking about the SEP for a second, what it really says is that committee participants widely would like to see policy at a modestly restrictive level at the end of this year, and that's 6 months from now. And you know, so much data and so much can happen. So remember how highly uncertain this is. But so that is generally a range of 3 to 3.5%. That's where people are, and that's what they want to see, knowing what they know now and understanding that we need to show resolve, but also be flexible to incoming data as we see it. If things are better, we don't need to do that much. And if they're not, then we either do that much or possibly even more. But in any case, it will be very data dependent. Then you're looking at next year, and what you're seeing is people see a bit more tightening in a range of maybe 3.5 to 4%. And that's generally what people see as the appropriate path for getting inflation under control and starting back down and then getting back down to 2%. So 75 basis points seem like the right thing to do at this meeting, and that's what we did.
Steve.
Steve Leisman, CNBC. Thank you for taking my question, Mr. Chairman. You have not used the phrase in a long time, monetary policy is in a good place, which is a phrase that you used to use often. Now that the committee is projecting 4% or 3.8% next year in terms of the funds rate, which is similar to where the market is now, the futures market of 4% funds rate next year. Do you think that's a level that is going to be sufficiently high enough to deal with and bring down the inflation problem? And just as a follow-up, could you break that apart for me? How much of that is restrictive and how much of that is a normal positive rate that ought to be embedded or not, in your opinion, in the funds rate? Thank you.
Sure. So the question really is, how high does the rate really need to go? And this is, the estimates on the committee are in that range of 3.5% to 4%. And how do you think about that? Well, you can think about the longer run neutral rate. You can compare it to that, and we think that's in the mid twos. You can look, frankly, at broader financial conditions. You can look at, asset prices. You can look at the effect you're having on the economy, rates, asset prices, credit spreads. All of those things go into that. You can also look at the yield curve and ask all along the yield curve, where is the policy rate? So for much of the yield curve now, real rates are positive. That's not true at the short end. At the short end of the yield curve in the early years, you don't have you have negative rates still. So that really is one data point. It's one part of financial conditions. So I think I have to look at it this way. We move the policy rate, that affects financial conditions, and that affects the economy. We have, of course, rigorous ways to think about it, but ultimately it comes down to, do we think financial conditions are in a place where they're having the desired effect on the economy? And that desired effect is, we'd like to see, demand moderating. Demand is very hot still in the economy. We'd like to see the labor market getting better in balance between supply and demand. And that can happen both from supply and demand. Right now, demand is substantially higher than available supply, though. So we feel that there's a role for us in moderating demand. Those are the things we can affect with our policy tools. There are many things we can't affect, and those would be, the things, the commodity price issues that we're having around the world due to the war in Ukraine and the fallout from that, and also just all of the supply side things that are still, pushing upward on inflation. So that's really how I think I would think about it.
But does 3.8%, 4% get it done? Does it get the job done and breaking the back of inflation?
I think it's certainly in the range of plausible numbers. I think we'll know when we get there, really. I mean, honestly, that would be, you would have positive real rates, I think, and inflation coming down by then. I think you'd have positive real rates across the curve. I think that the neutral rate is pretty low these days, so I would think it would. But you know what? We're going to find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and on what's happening in the economy.
Thank you.
Thanks. Nick Timmeros of the Wall Street Journal. Chair Powell, you've said that you like your policy to work through expectations, and now obviously this decision was something quite different from how you and almost all of your colleagues had set those expectations during the intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations data, but I'm wondering, on the inflation expectations data, was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at we look at a broad range of inflation expectations. So you've got the public, you've got surveys of the public and of experts, and you've also got market-based. And I think if you look across that broad range of data, what you see is that expectations are still in the place, very much in the place, where short-term inflation is going to be high, but comes down sharply over the next couple of years. That's really where inflation expectations are. And also, as you get away from this episode, they get back down close to 2%. And so this is really very important to us that remain the case. And I think if you look for most measures, most of the time, that's what you see. If we even see a couple of indicators that bring that into question, we take that very seriously. We do not take this for granted. We take it very seriously. So the preliminary Michigan reading, it's a preliminary reading. It might be revised. Nonetheless, it was quite eye-catching, and we noticed that. We also noticed that the index of common inflation expectations at the board has moved up after being pretty flat for a long time. So we're watching that, and we're thinking this is something we need to take seriously. And that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with 75 basis points today was what we saw in inflation expectations. We're absolutely determined to keep them anchored at 2%. That was one of the reasons. The other was just the CPI reading.
So if you saw a movement like that again, another tick up in inflation expectations, would that put a 75 or even 100 basis point increase in play at your next meeting?
You know, I'll just say we're going to react to the incoming data and appropriately, I think. So I wouldn't want to put a number on what that might be. The main thing is to get rates up, and then pretty soon we'll be in an area where we're, I think, as you get closer to the end of the year, you're in a range where you've got restrictive policy, which is appropriate. 40-year highs in inflation. We think that policy is going to need to be restrictive, and we don't know how restrictive. So I think that's how we'll take it.
Hi, Chair Powell. Neil Irwin from Axios. Thanks for taking our questions. The late-breaking kind of decision to go to 75 basis points, do you worry that that will make policy guidance a less effective tool in the future? And should we think of that as a kind of symmetrical reaction function if we start to get soft readings on inflation, or if the labor market starts to roll over?
To take your second question first, yes. I mean, I think we're resolved to take this on, but we're going to be flexible in the implementation of it. Sorry, and your question was guidance. So again, the overall exercise is that we try to provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better. It's always a trade-off, because you have to live with that guidance. And so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. With us having really just done very little in the way of raising interest rates, financial conditions have tightened quite significantly through the expectations channel, as we've made it clear what our plans are. So I think that's been a very healthy thing to be happening. So, and I would hope that it's always going to be any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out, and that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause. Even if we don't see progress for a longer period, that could cause us to react. But we will soon enough. We will be seeing some progress at some point. And we'll react appropriately to that too. But I would like to think, though, that our guidance is still credible, but it's always going to be conditional on what happens. This is an unusual situation to get, some data late during blackout, very close to our meeting. Very unusual to one that would actually change the outcome. So I've only seen, in my 10 years plus here at the Fed, I've only seen something like that, even close to that, 1 or 2 times. So I don't think it's something that'll come up a great deal.
Colby.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that criteria? And how is the committee thinking about the potential trade-off of much higher unemployment than even what's forecasted in the SEP if inflation is not moderating, at this acceptable pace?
Sorry, the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right. So what we want to see is a series of declining monthly readings for inflation, and we'd like to see inflation headed down. So, and right now our policy rate is well below neutral, right? So, soon enough we'll have our policy rate. Let's assume the world works out about like the SEP says. The policy rate will be up where we think it should be, And then the question would be, do you slow down? Does it make you, you'll be making these judgments about, is it appropriate now to slow down from 50 to 25, let's say, or speed up? So that's the kind of thinking we'll be doing, and again, we're looking, ultimately, we're not going to declare victory until we see a series of these, really see convincing evidence, compelling evidence that inflation is coming down. And that's what I mean by, that's what it would take for us to say, okay, we think this job is done, because we saw, and frankly, we saw last year, inflation came down over the course of the summer and then turned right around and went back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation, it's going to require more than just some pain at this point?
So again, I think that I do think that their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2% while the labor market remains strong. I think that what's becoming more clear is that many factors that we don't control are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't, the monetary policy stance doesn't affect those things. So, but having said that, there is a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that path is to move demand down, and you have a lot of surplus demand in take, for example, in the labor market. So you have two job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where that ratio was at a more normal level, and you would expect to see those wage pressures move back down to a level where people are still getting healthy wage increases, real wage increases, but at a level that's consistent with 2% inflation. So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So you have effectively what we think of as a vertical supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher quantities, not more cars, because they can't make the cars because they don't have the semiconductors. So in principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest, because of the unusual situation we're in on the supply side. So there's a pathway there. It is not going to be easy, and again, it's our objective, but as I mentioned, it's going to depend to some extent on factors we don't control.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation? Thank you.
So you're right. In the SEP, we have unemployment going up to 4. The median is 4.1%. There are, of course, a range of actual forecasts, and I would characterize that if you were to get inflation down to, on its way down to 2%, and the unemployment rate went up to 4.1%, that's still a historically low level. We hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for like 1 year in the last 50. So the idea that 3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome.
Does that include people losing their jobs, or?
We don't seek to put people out of work. Of course, we never think too many people are working and fewer people need to have jobs. But we also think that you really cannot have the kind of labor market we want without price stability. And we have to go back and establish price stability so we can have that kind of labor market. And that's a labor market where, where workers are getting wage increases. Maybe the workers at the lower end of the spectrum are getting the biggest wage increases, as they were before the pandemic, where participation is high, where there's lots of job opportunities, where it's just the labor market we had before the pandemic that's what we want to get back to. And you see, disparities between various groups at historic lows. We'd love to get back to that place. But to get there, it's not going to happen with the levels of inflation we have. So we have to restore that, and it really is in service in the medium and longer term of the kind of labor market we want and hope to achieve.
Hi, Chair Powell. Matthew Boesler with Bloomberg. So as you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate and the SEPs over the next couple years, and it removed a line from its policy statement about thinking that the labor market can remain strong while it tightens policy. You just mentioned that that is still your objective, though, so I'm wondering if you could explain why that line was removed from the statement, and also whether this means the FOMC is trying to induce a recession now to bring inflation down.
Not trying to induce a recession now. Let's be clear about that. We're trying to achieve 2% inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that sentence. Clearly, it's our goal to bring about 2% inflation while keeping the labor market strong, right? And that's kind of what the SEP says. That the SEP has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So, and this is a strong labor market. This is a good labor market. And as I mentioned, there are pathways to do it. But those pathways have become much more challenging due to factors that are not under our control. Again, thinking here of the fallout from the war in Ukraine, which has brought a spike in prices of energy, food, fertilizer, industrial chemicals, and also just the supply chains more broadly, which have been larger and longer lasting than anticipated. So the sentence that we deleted said that we believe that appropriate monetary policy effectively alone can bring about the result of 2% inflation with a strong labor market. And so much of it is really not down to monetary policy. The sentence isn't, it kind of says on its face that monetary policy alone can do this. And that just didn't seem appropriate, so we took the sentence out.
And given the new projections for the unemployment rate, could you talk a little bit about what accounts for, such reduced confidence against, say, a month ago or 3 months ago that inflation will largely normalize on its own as these supply side issues get worked out? Thanks.
Well, yeah, I think you've seen, again, we've been expecting progress, and we didn't get that. We got sort of the opposite. So I also think the situation really since the consequences of the Ukraine war become more and more clear, what you're seeing is the situation getting more difficult. And you look around the world, I mean, lots of countries are looking at inflation of 10%, and it's largely due to commodities prices. But all over the world, you're seeing these effects, and and we're seeing them here. Gas prices, all-time highs and things like that. That's not something we can do something about. So that is really. And by the way, headline inflation is important for expectations. The public's expectations. Why would they be distinguishing between core inflation and headline inflation? Core inflation is something we think about because it is a better predictor of future inflation. But headline inflation is what people experience. They don't know what core is. Why would they? They have no reason to. So expectations are very much at risk due to high headline inflation. So it's become, the environment has become more difficult, clearly, in the last 4 or 5 months. And hence the need for the policy actions that we took today, hence our resolution to get rates up and ultimately get them to where we think they need to be in coming months.
Thanks, Chair Powell. Edward Lawrence with Fox Business. I want to ask you, you talked about CPI going to 8.6%. The retail sales surprised the market by falling, and then revisions to the previous months were down. Are you hearing from contacts about consumers slowing spending or changing their habits?
So we're, of course, watching very, very carefully for that, and looking at the retail sale, the big store numbers and all that kind of thing. And so, but I think the fair summary of what we see is you see continuing shifts in consumption. You see some things sales going down, but overall, spending is very strong. The consumer is in really good shape financially. They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels, healthy growth levels.
So then as you are raising rates in this economy, how closely are you watching consumer spending, or is there another indicator that you're watching more closely?
It would be hard to watch anything much more closely than we watch consumer spending, but we watch everything. We watch business fixed investment, which actually has softened a bit, we're responsible for watching everything. But consumption is 60-some% of the economy, 2/3 of the economy. So naturally, we spend a lot of time on that. And again, there's a lot going on. There are a lot of flows back and forth, but ultimately, it does appear that the U.S. economy is in a strong position and well positioned to deal with higher interest rates.
Thank you, Mr. Chairman. Michael McKee from Bloomberg Radio and Television. Are you targeting headline inflation now or core inflation? In other words, how far would you chase oil prices if they keep going up, if that's going to be the component that drives expectations? Would you risk recession for a headline rate if the core rate is holding steady or starting to go down?
This is a great question.
We're responsible for inflation in the law, and inflation means headline inflation. So that's our ultimate goal. We, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's a much better predictor of where inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that. But the current situation is particularly difficult because of what I mentioned about expectations. We can't affect. Really, I mean, the energy prices are set by global commodity prices, and most of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too. Also, other things. So we can't really have much of an effect, but we have to be mindful of the potential effect on inflation expectations from headlines. So it's a very difficult situation to be in, and we can't do much about the difference between the elements that make up headline that are not in core.
Could I just, as a follow-up, get a clarification on the SEP? When the members gave their forecasts, when were they inserted into the record? Were they revised after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to go to a 75 basis point move?
The SEP is of one piece. It reflects all of the economic readings. It also reflects the 75 basis point increase. This is important. So people had that in hand when their SEPs were submitted. So in other words, it's not in addition to what's in the SEP. The SEP, everyone's SEP reflects their thinking about this rate increase and what's going forward.
Hi, Victoria Guida from Politico. I wanted to ask about how you're measuring progress, especially since you've now started front-loading rate hikes more. You've talked about how you want to see inflation coming down over a series of reports, and I guess I'm curious whether you think inflation data itself is a really good indicator, or whether you might be concerned that it's a lagging indicator, or that it might send confusing signals, given that, as you've talked about, there are sort of supply and demand aspects. And I guess my question is, do you think that inflation data will tell you when you've gone to where you need to go, or do you just feel like maybe it's better to overshoot than to undershoot?
So I think the role that we can play, maybe the way to get at it is to say that the role that we can play is around demand, right? So, and we'll be able to see the areas that we can affect are those that are associated with excess demand. And we'll be able to see our effect on, for example, job openings in real time. So, and that would tell us about wages. Wages are not principally responsible for the inflation that we're seeing, but going forward, they would be very important, particularly in the service sector. So, sorry, I'm not sure I'm getting to your question.
My question is inflation data itself the best indicator for when you're getting to where you need to go, or might it lead you to go too far?
There's always a risk of going too far or going not far enough. And it's going to be a very difficult judgment to make, or maybe not. Maybe it'll be really clear. But we're quite mindful of the dangers. But I will say the worst mistake we could make would be to fail, which it's not an option. We have to restore price stability. We really do. Because everything, it's the bedrock of the economy. If you don't have price stability, the economy is really not going to work the way it's supposed to. It won't work for people. Their wages will be being eaten up. So we want to get the job done. This inflation happened relatively recently. We don't think that it's affecting expectations in any kind of fundamental way. We don't think that we're seeing a wage price spiral. We think that the public generally sees us as very likely to be successful in getting inflation down to 2%, and that's critical. It's absolutely key to the whole thing that we sustain that confidence. So that's how we're thinking about it.
Hi, Brian Chung with Yahoo Finance. I just want to expand, I guess, on what you just said now about the general public feeling like, you can get this done. When you talk about consumer sentiment being down, household inflation expectations being up, recession just broadly being dinner table talk, does the general feel among American households and also businesses square with your explanation of the economy, given that the description of inflation in the statement didn't change between May and June? Thanks.
I love these reporters.
Clearly, people don't like inflation a lot, and many people are experiencing it really for the first time, because we haven't had anything like this kind of inflation in 40 years, and it's really something people don't like, and they're experiencing that, and that's showing up in surveys and in all kinds of ways, and we understand that, and we understand the hardship that people are experiencing from high inflation, and we're determined to do what we can to get inflation back down. So that's really what we're saying. Clearly, it's an incredibly unpopular thing, and it's very painful for people. So, but I guess what I'm saying is the really critical question from the perspective of doing our job is making sure that the public does have confidence that we have the tools and will use them, and they do work to bring inflation back down over time. It will take some time, we think, to get inflation back down, but we will do that.
Chris.
Thank you. Chris Rugaber at Associated Press. You have talked about inflation a few times and mentioned oil prices, China lockdowns. But aside from rises in commodity prices such as gas prices, we're also seeing stickier measures of inflation increasing, such as the Cleveland Fed's median and trimmed mean CPIs. I mean, how persistent do you see those underlying measures of inflation, and how do you expect and where do you see those going in the near future?
Yeah. So, as I mentioned, I think in my opening statement, the inflation has started off in quite narrow, very directly pandemic-related areas, and it's spread now broadly across the economy and into the services sector as well. It was really in the goods sector at the beginning. And in particular, you're seeing in travel now, if you've flown on a plane lately, planes are very full and plane tickets are very expensive. some of that will be passed through of energy prices, but it's so you're experiencing services inflation. Shelter inflation is high. So so the question, and you see the Cleveland measure going up, and many other measures are going up. So it's a time when we're not seeing progress, and we want to see progress, and that's really another part of why we did what we did today, and why the SEP looks like it does, is that we see it as appropriate to get the policy rate up to restrictive levels, which would be, in the thinking of the committee, somewhere in the range of 3 to 3.5% by year end, and then after that, you see what the rest of the SEP says. So I hope that's responsive to your question.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Do you still think a softish landing is possible, and how would you define that at this point, considering the revised projections for unemployment, GDP, inflation?
So I think what's in the SEP would certainly meet that test. If you see, you're looking at getting back down to almost a 2% inflation by 2024, and the unemployment rate is still as low as 4.1%. That would be, I would call that as meeting that test. Do I still think that we can do that? I do. I think there's. I don't want to be the handicapper here. That is our objective. And I do think it's possible. Like I said, though, I think that events of the last few months have raised the degree of difficulty, created great challenges, and again, the answer to the question, can we still do it? There's a much bigger chance now that it'll depend on factors that we don't control, which is, fluctuations and spikes in commodity prices could wind up taking that option out of our hands. So we just don't know. But we're focused on. Very, very focused on getting inflation back down to 2%, which we think is essential for the benefit of the public, and also to put us on a path back to a sustainably strong labor market like the one we had before the pandemic.
Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, I was wondering if you could talk a little bit more. Economists are worried that you're kind of hitting the economy with a sledgehammer, and that now there's even more risk of a recession than a 50-50 path of rates. So could you talk a little bit more about that, and what evidence would get you to stop rate hikes and maybe even reverse them?
Sure. So, as I mentioned, financial conditions have tightened over the last 7 months, and that's a good thing, we think. But the federal funds rate, even after this increase, is at 1.6%. So it's hard to see how that is too high of a rate. And even if we did another, we're going to get here by the end of the summer somewhere in the twos probably. Still, that's still a low rate. So that's not a rate that is calculated to bring a recession on. And by then we'll have seen a whole lot more data. As I mentioned a couple times, the committee's views are around a modestly restrictive stance, which would be in the 3 to 3.5% range by the end of this year. But that's conditioned on that being the appropriate thing to do. If we see data going in a different direction, it'll be reflected in our policy, as you see today. We'll be watching if things go in a direction we don't expect, then we're going to adapt. And I would say this is a highly uncertain environment, extraordinarily uncertain environment. So. Again, we'll be determined and resolved, but flexible.
Okay, Evan.
Evan Reiser, Market News International. Thank you, Chair Powell. I was wondering if the Fed has initiated a review of the conduct of monetary policy over the last 2 years or so, given the inflation, and will that be shared with the public? And then secondly, given the illiquidity and extraordinary volatility in financial markets, are you concerned that QT will make that worse?
Sorry, what was your question on QT?
Just given the illiquidity and extraordinary volatility in financial markets, whether QT will make things worse.
So, of course, we've been looking, very carefully and hard at why inflation picked up so much more than expected last year and why it proved so persistent. it's hard to overstate the extent of interest we have in that question, morning, noon, and night. So, but you have to understand the context. Really, the context is this: for decades before the pandemic and the reopening, you had a world where inflation was dominated by disinflationary forces such as declining population or aging demographics, let's call it that, globalization enabled by technology, other factors, low productivity. So, and that's how all the models work. Is decades and decades of data. They look at that. It's a very flat Phillips curve work, and the supply shocks tend to be transient, right? So we have now experienced an extraordinary series of shocks, if you think about it. The pandemic, the response, the reopening, inflation, followed by the war in Ukraine, followed by shutdowns in China. The war in Ukraine potentially having effects for years here. So we're aware that a different set of forces are driving the economy. We have been, obviously, for quite a while, that these forces are different. Inflation's behaving differently. And in our thinking, it really is a question of very strong demand, but you couldn't get this kind of inflation without a change on the supply side, which is there for anybody to see, which is these blockages and shortages and people dropping out of the labor force and things like that. So that's how we're looking at it. And we've done a lot of work internally on and thinking about what all that means. The thing is, you don't know whether those forces are, what extent are they going to be sustained? In other words, will we go back to a world that looks a little more like the old world, or are we really going to be in a world where major supply shocks go on and on? The history is you see these waves of supply shocks, as you did in the 70s, and then they go away, and sort of there's a new normal and things settle down. But honestly, we don't know what that's going to be. In the meantime, we have to find price stability in this new world and maximum employment in this new world where clearly inflationary forces you're seeing them everywhere. Again, if you look around the world at where inflation levels are, it's absolutely extraordinary. It's not just here. In fact, we're sort of in the middle of the pack, although I think we have, of course, a different kind of inflation than other people have, and partly because our economy is stronger and more highly recovered. So that's what we're doing. We've done a lot of introspection and work on that. And sorry, on QT, we've communicated really clearly to the markets about what we're going to do there. Markets seem to be okay with it. We're phasing in. Treasury issuance is down quite a lot from where it's been. So I have no reason to think markets are forward-looking and they see this coming. I have no reason to think it will lead to illiquidity and problems. It seems to be kind of understood and accepted at this point.
Thanks. For the last question, we'll go to Mark Hamrick.
Mr. Chairman, Mark Hamrick with Bankrate. Wonder what your assessment is about the outlook for the housing market given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger for the great financial crisis over a decade ago. Thank you.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy when unemployment was 14% and the true unemployment rate was well higher than that. So, and that was rates are low, and now they're coming back up to more normal or above levels. So in the meantime, while rates were low and while demand was really high, obviously demand for housing changed from wanting to live in urban areas to some extent to living in single-family homes in the suburbs, famously, and so the demand was just suddenly much higher and low. So we saw prices moving up very, very strongly for the last couple of years. So that changes now, and rates have moved up. We're well aware that mortgage rates have moved up a lot, and you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect housing prices? Not really sure. It's, obviously we're watching that quite carefully. You would think over time, so there's a tremendous amount of supply in the housing market of unfinished homes. And as those come online, whereas the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low. So that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we ideally do our work in a way where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels. So thank you very much.
Okay, let me just do one thing over here. Okay, so that was actually pretty informative. As you guys kind of talked about in the comments section, he is spinning around in circles here a little bit, but he does have a little bit of a plan. It seems like he has solutions for some. You want to take a bath? Yeah, let's take a bath. Let's take a bath. No, are you not afraid of baths anymore? Yeah, bath. No, okay, I'll give you some head scratches. Sorry guys, losing my train of thought because of Loki here. He has somewhat of a plan to deal with some basic levels of inflation, but it seems like he's saying that he really doesn't have much control over oil going forward, and oil seems to be the really big thing that we're all having a big problem with, because everything that we get from this country usually comes from somewhere else, right? We import a lot of goods, we kind of produce technology products, and we do some manufacturing stuff, but that stuff usually stays here. We don't really export a great amount of things besides agriculture. Now that, gas prices keep on going higher and higher, all those costs are making corporations have lower margins, hurting the markets, hurting Bitcoin, etc. He has control over some of the spending, making people not spend as much capital to kind of help with the supply side, or the demand side. But we still, he has no control over people going to the pump and getting gas and stuff like that, besides maybe taking away their jobs by sending us into a recession. We'll have to see what goes on forward. There was a lot of nothing in that, because some of you guys also said he kept on saying the same thing over and over and over again. He feels like things are still strong, and I agree with him. But when he talks about strong guys and things about things in the market being okay, he's talking more about the economy, and I don't think he really perceives like everyday people as a major component of the economy. We're kind of here, we're still buying stuff, but I think his focus is on really making sure businesses can survive and keeping inflation low. On the flip side of that, Biden really has to control the gas prices here. And I know the media says he can't do anything about gas. He can't do a single thing about it. He can do a lot. He just has to be able to make some deals with Saudi Arabia. Whatever that deal is, he'll probably have to make it if he wants to win the midterms. Not likely at this point. Or he has to go over to the oil executives and say, hey, here, we're going to give you permits for 2 more refineries so you guys can turn more oil into gas. And hey, we're going to make sure that you guys have enough resources to pump as much oil as you guys need to. Because we want to, for inflation, whatever, we can, that'll be fine overall. We'll deal with it in time. It's going to be painful. We're going to get over it. But as far as oil, it's okay to overcorrect in the oil markets and really drive the price of a lot of stuff going down. I don't necessarily care if oil stocks go down. I really don't, because all the margins for a lot of corporations will be skyrocketing, and during the earnings report that we see next quarter, that'll be where everybody's like, oh yeah, look at our massive earnings. Our margins are up a lot more. We're making more profit. We're going to be hiring more people, and then we can start getting back onto the normal economy here. Now, because Biden isn't doing any of those 2 things right now, as far as we know, he hasn't made a deal with Saudi Arabia, even though he's visiting next month, and he doesn't like the oil corporations. In fact, I think he keeps on attacking them right now. We're most likely not going to be out of this for a while, right? So it's kind of a give and take. Jerome Powell's going to do what he can to fix this. He's still behind the ball. He's taking this more seriously now, kind of like matching what we've been talking about. Like, hey, inflation's really, really bad. Do something about it. That's going to be fine. But as you kind of heard, he does have some valid excuses of why the housing market may not come down soon, right? Supply and demand, there's some things he really just can't change. He's going to try to change the overarching view of how we see things here. And, it's not going to be great, but it's what we have at this moment in time. All right, so let's take a quick peek here at Bitcoin. Right before we started off here, this move, probably best to just do it here, yeah. I opened up a Fibonacci resistance chart, a Fibonacci extension chart, and I told you guys the price target off of this one a few minutes ago before we actually started this his speech would be right up here on the white line. We actually went above that, but overall we did come back down crashing until we hit the support level again, and we bounced off again of that one. So right now what I'm hoping for is now that we've broken out here, what we're going to want to do is break out above this next Fibonacci level here. If I can see me next trend line level here, right there, which may take some time. But now that we've had this little bit of a boom, I'm optimistic that we're not just going to freaking crash in the next hour here. We might consolidate a little bit further, and then hopefully, I tried to show this to you guys while I was streaming, but it was more tough. Hopefully we can try to find some way of consolidating out of here now that we've broken out that wedge that we talked about. I think somebody pointed that out a little bit ago. I forgot who. And now you can see we're kind of in this downward channel, unfortunately. However, this is not a bearish channel. A bearish channel looks like this. We go down. What the heck? Oh, magnet's on. We come down, we consolidate, but then we do this, and then we break down. So it looks more like this, right? That's a bearish flag. We're not in any one of those type of situations right now. So we have a little more opportunity to consolidate right now and let the whales decide which way we go down. But at this point in time, guys, I might be shooting myself in here in the foot, but I am more optimistic that we do a little bit of consolidation here. Also, if you guys go over to the hour chart, you'll see a little bit of a double bottom. Maybe the 45-minute chart will play it out a little better. Like a bottom breaking above the neckline here, and that's kind of what we're seeing right now. So we'll see if we can continue to break out, understanding that there is a hard level of resistance right up here at this Fibonacci level at 22,758. That's going to be more of a wait to see if we break above that in 23,000. We ran into resistance right around here at 23,062-ish a few days ago. That's going to be important. But okay, that was definitely a wild ride, and the market was definitely having a fun time with that. Excuse me, let's go to the 1-minute chart here. Let's go to the hour chart here. We can get rid of this old trend line now that we don't need it after we broke out above it. And if you guys wanted to trade that breakout, by all means, go for it. Have some fun with it. We did have an official breakout here off of Fed News. I just don't like trading this volatility, and that's just me being overly cautious, as you guys know. Let me move that stuff over here. Okay. What else? You guys have any questions? Let me know. And hey, Thomas, do you think Bitcoin will come down again? Oh, no, I just answered all those questions, yeah. But yeah, I think in the future, guys, we will be coming down more. But again, I hedge my bets on those types of statements that I make by buying some crypto every single day and also dumping large positions at specific points that we've talked about, right? So, sorry, my microphone got a little tidbit. Like buying around the 200 weekly moving average, I bought a large chunk down there. I have another chunk I'm waiting to buy if we drop even further. And then if for whatever reason if we don't drop any more, then we're going to be consolidating for a few weeks at these levels. And then from there, breaking back above that 200 weekly exponential moving average. And that's why I might buy the rest of that chunk of cash there. But right now, guys, we're looking a little bit more optimistic in the immediate short term. After this, we'll have to see. But maybe it'll be easier if I actually zoom into my screen here. I got dog hair on my beard. One less, 250%. So let me delete my head here very fast. There we go. Dogecoin up 7%. Ethereum only up 0.3. 88 up 8. Ethereum Classic up 5. XRP up 2. I think what this is showing you is which coins had the more shorts on them, because those shorts are being squeezed right now. Shiba up 5. FTM up 5. Matic up 0.72, Litecoin up 6, AXS 5, Gala 3, and these are massive swings. Remember, these were all negative just about an hour ago, like down 6%, down 7%. So these are massive swings that you're seeing in these coins. Crow not up much, Dot up 8, Dogecoin not up much, Engine up 3, EOS up 4, ApeCoin up 7, ICP up 3. Luna still down 4, Mana up 8, Sand up 3, 4. So you're seeing some positivity here. Let me take this back out here and zoom back out again. So we'll have to wait and see if we can actually truly break out above this, or over the next hour or so where we get rejected and then come back into some type of consolidation phase, hoping to break out above this next level and trying to break out eventually above that $23,000 resistance, leading us to try to go back up towards 24,500. And then from there, we could have one of those longer periods of consolidation that would make all of us very happy, because that means we're not like crashing every day and you don't see all the chaos. And my hope, if we do like have some type of a consolidation where like for literally like 2 weeks to a month we're not doing anything crazy, which may be boring for us to watch, it will give time to all of these exchanges and companies that have had no idea that Bitcoin can fall this low like it does every freaking cycle. They had no idea it was going to fall so. This will give them time to really get the finances organized and really make sure that they're not going to cause another problem with them if the market tanks again. That's going to be a really big thing going forward. See, and hey, bot for mortgage rates at 6.25. Yeah, there's no way. I just don't understand who would buy a house in this market. You got to have a lot of money to want to buy with those mortgage rates there, unless you're paying in cash. Cash is always okay as well. Let me go back over here very fast. See, and hey, Justin, how's Matic look? Here, let me see. Matic looks fine. It gave up all the losses earlier today. It looks like it's kind of balancing back out. Just like Bitcoin, though, you're going to want to see it break out. Matic hasn't broken out just yet. It had a smaller breakout here. Oh, that was a false breakout, too. But the breakout you want to see it break out above is going to be right there. And that kind of leads me to believe also we need a little bit more time to consolidate before making a big move. But that's what you're going to be hoping for if you want to buy Matic at this point in time. Or if you were going to be buying Matic, it would have been off of this neckline here after we had a double bottom. Bottom, break above the neckline, you buy right here. And then you're going to be doing some type of Fibonacci support level where you're hoping that we get up to, oh man, no, that's not even good. Kind of change this up a little bit though. No, it doesn't make too much of a difference at that point. Probably your goal would be up here at 42 cents if you're going to be buying the neckline right here because you already hit the price target. Yeah, there's not really much there. We came down really far. Actually, we came down lower, that's why. Yeah. Anything else here? No, that'd be about it for Matic right now. Make a move right here. Back over to the 1. And we'll see. We're getting really close to resistance level, guys. We'll see if we're going to be able to break out again or not. Better to put this back up here. There we go. Alrighty. And hey, could be of us. After, be careful because Bitcoin dominance still an uptrend. We will see where the Bitcoin dominance pulls back for the altcoins market. Yeah. I don't think Bitcoin dominance is going to really go down significantly until we have one big last flush. We'll have to just see where that flush occurs. Because remember, guys, one of the reasons that we're holding this level, we've talked about this a few times here, is you guys know I'm a big proponent of Gann fans and Fibonacci levels. I love using those as good support levels. So when the average person you guys see on TikTok or Twitter or whatever, they'll normally have maybe Fibonacci lines, but they'll have trend lines and old historical RSI levels and stuff like that. What I prefer to use is Gann fans because you can see right here, kind of now we have a little bit of hindsight to help us out here because when we're there it's always so scary. Look at that, right there. On the 4-to-1 Gann fan level. Let me double check this. Make the 4-to-1. Yeah, 4-to-1 Gann fan level. Look at that. Perfect. Right? Now, we didn't tap on it exactly, but we found some support there. And that's why we were talking about it over the last few days here. So if I go over to the 15-minute chart, you guys will see how close we got. Right? Oh, no, we did actually tap on it. Look at this. Tap. We actually didn't break down below the 5-to-1 right here. I always forget which one this purple one is. 3-to-1, excuse me. So we got close. But ultimately, we found a strong level of support, and it looks like we're trying to have some type of reversal here. Whether that reversal works, we will have to wait and see. But we did find support. We'll see how long we bounce. For instance, the last time we found support, I guess it actually won't be support the last time because we would have fallen down below it. Let's just go to the 4-hour chart, I guess. Right? We bounced here, bounced around here. Again, you're normally using weekly and daily charts with this information, but still, bear with me. The moment we officially closed down below it here, that was a signal saying, hey, things are going to get worse. And eventually, we did eventually go kaput, right? Because we were breaking down below the 2-to-1 and breaking below the 8-to-1. Over here, this one was a little bit more different because it was a little more choppy. But we did find support here last time as well after a big move. And normally, I like to use these specifically with big moves. Normally, we can kind of grind in between them, as you guys can see. But then if you just go to other Gann fan charts, you'll see that there are lots of Gann fans you can put on any chart, and a lot of them can honor themselves. So a good example of this might be, you'll see right here, you saw the gain funds I just showed you. You can see on this one, on the weekly chart, broke down, support, broke down. So, well, we didn't actually get support here. We had support for maybe a few hours, maybe. Yeah, like 4 hours, that's it. And then we continued to break down here. And that's because we ran into the Fibonacci level that we just talked about a few minutes ago. I see the gain fan level, this one right here. So it's not always going to be perfect, but you can usually say, hey, we're going to slow down within this block range. So I could have drawn a line, something from like here to here, could be somewhere where we can stop. And that would be what you might call a buying zone for a reversal. But at this point in time, it would have been so risky because of what the Federal Reserve and everything like that, all the bad news coming out. And I'm not the type of guy that takes on that type of risk. One other thing here, we do have another Fibonacci level, I think, or gain fan level. We consolidated for a week above this one. I don't know what this glitch is. Oh, did they fix the glitch? Maybe they did. They did fix the glitch. Okay. We broke down below this 2-to-1 gain fan level here. This gain fan level started in 2015. This is the last week that we ever broke down below it. And you can see right now, we have 2 Fibonacci levels of support. And we also have this gain fan level here. And we're going to see if we can actually try to hold it. We held it for a few hours, eventually broke down. That's also a level of resistance we're having trouble with at this moment in time. So there's a lot of stuff going on right now. But usually when you're stuck in a lot of stuff, it's more of a call for consolidation rather than larger swings. So which is hopefully what I'm hoping we can have here to give the market ultimately a rest, kind of going into the weekend where we may start to see more activity, more bullishness, etc. One other thing here is as we kind of consolidate a little bit more. Is this the one? Okay. No, that's not the right one. Is this the right one? No, this is no. Something else too. And you can also see we have some Fibonacci supports. Is there another gain fan level? No. If we break down below the gain fan levels we just talked about a few minutes ago, then our next level of support will most likely be down here around $17,000 to $14,000. That'll be a pretty sizable move. But that should be one of the largest flush outs that we have, and that may be the biggest capitulation that we see to date because there will be corporations or exchanges actually being forced to liquidate their positions in massive amounts, causing us to have one nasty wick, but on the other side, some really good buying opportunities at these levels. So, if you guys haven't bought any crypto so far in this entire bear market, if we get down here, I personally, I would start at that level if you wanted to get in there. Otherwise, like people like me, I've been buying crypto throughout the whole cycle, buying in big chunks down here, waiting for another possible big chunk down here, understanding that there's always a chance we don't get down there, but the way the economy is looking, there's a good chance we do. Okay, let me put this back on the one. Auto, there we go. Watching this consolidation happen here a little bit, hoping for some breakouts to occur later on, but now that we have that little bit of a high caused by unusual volume off of the Federal Reserve, we're most likely going to quiet back down a little bit, but we'll see if we're going to break out again. Probably this is a 1 hour chart. Probably we can keep on the 1 hour chart for now and watch Bitcoin move up. And at least we have that Fibonacci support level. You can see we held it so far, even on the minute chart. Oh, let's see. Hey, Julian, I'm fighting. Luna is up. Luna on my chart is down 7% since 5 p.m. Pacific time yesterday. So if you go over here and you just open up like a 4 hour chart, it's down from yesterday. It's down. As much as we might like it to be up, it's down. But okay. Let's see right here. And guys, thank you very much for subscribing. I really do appreciate it. Thanks, Gupta. I really do appreciate it as well. And somebody else did it a minute ago. Leo, thank you very much, Leo. I appreciate it, guys. See. And hey, Deezer, just found some ADA on an exchange I hadn't used in a while. Added to it. Dude, there you go. It's always nice finding some long lost crypto there. At least it's not on some type of laptop where you don't have the password to it. Those stories are always crazy. I know it's right here. Hey, one Tony. Lovium, I'm not entirely sure what this is. Is it going to load? There we go. Wow, this has been dumping. Was that almost $2,000 now? It's at 179. From a technical standpoint, it looks like it's had a double bottom, so you would have wanted to buy off of this this neckline breakout here. It also had another breakout right here. So if you wanted to get into it, it would have been right there, and you would have had maybe a 2 to 3% stop loss, and you'd be riding it up right now, raising that Fibonacci extension level, which would be something like this. Running into that first resistance where you can see that we kind of had a little bit of a hiccup, and now grinding back up, hopefully up to about 188 or so, for that to be probably your main price target right now if you're into this one. But I'd be careful because most of the move has already happened here, unfortunately. But it looks okay. Okay here, guys. Let me put this back over to Bitcoin 1 minute chart, and there we go. Going to be watching to see if we consolidate or we break back down, or whatever happens here. What's right here? And hey, on time. From what I've seen from all the meetings, it usually bleeds out 4 to 5 hours after. Yeah, and that kind of matches up with this little pump that we saw going back to consolidation at this moment in time. And plus, the market closes in about 13 minutes here, so that will let Bitcoin kind of do its own stuff. And we're not going to be led too much by the futures markets here. Let me go back over here to CNBC. Geez, this landline stuff with Xfinity is trying to kill me here. Yeah, it's still even loading for quote finder here. There we go. Dow's up 339, up over 1%. S&P up 1.62%. Nasdaq up almost 3% here. Russell 2K up about 2.3%, and the VIX is down a little bit. So that is good news for a little bit more of a potential reversal here. How much of a reversal? That's going to be the question, especially leading into tomorrow, because then the effects of what Jerome Powell said is going to sink into the market overnight, and then we should see how everything really gets affected here. But we had a nice little drop during his announcement. Then we had a little bit of a pop as those shorts got squeezed back out here. And if we take a quick look over here towards whale trades, 5 million, 6 million long, 7 million longed, 6 million longs, 8 million longed, 5 million longed, 4 million shorted, 6 million shorted on Ethereum, Bitcoin shorted. This was a while ago. And you got Bitcoin longed again, Ethereum shorted, Bitcoin longed, Ethereum longed, Bitcoin longed, Ethereum shorted, so forth, and a lot of big longs and shorts here. So you're seeing a bit of a whale battle going on. Eventually, one side is going to give up and capitulate temporarily, and then there's going to be another setup, and then it will be able to trade that breakout. But right now, the breakout you guys should be looking for is something like this. If we break it above this trend line here, that will give you guys enough consolidation to have a larger move going up, possibly up to $23,000 to $24,000. Excuse me, guys. Whoosh. Let's see. And hey, Crypto Yellow Vest, in an hour, I still need to hold the 21,300 for me. Yeah, we're well above that one right now. At least, well, not well above it. We're close to it. I want to see if we can hold that Fibonacci level. And of course, guys, we still have like 4 hours left until the end of the trading day. I think towards the last hour, we should see a little bit more volatility as whales try to either make us close below some Fibonacci levels, or try to keep us, from falling down below them as we close out the day. Let's see. And here, LOS, we need the DXY to go more down. It's probably not going to be going down for a while here unless inflation gets under control. The euro against the dollar is crashing, or going down quite a bit. The Canadian dollar, everything against the dollar is pretty much going down right now, and that's really making one strong dollar, which means our purchasing power abroad is going up quite a bit. But overall, with inflation, is it really going up? Who knows? Yeah, no worries, Tony. Happy to help you guys out. Let's see. Friday we get Powell talk again. Yeah, different topic, but yeah, he's going to be busy this week. And I think pretty soon we may have some more hearings going out. So let me kind of zoom back in on this a little bit here. Everybody's going to be talking about what he just said for the next few days. And it was more mixed than anything. It wasn't necessarily all good. But I did like that he tried to give us some forward guidance here, to give us some updates about what he's thinking about over the next 3 quarters and what his plans are for the next the next cycle here. And hey, Andre, wonder if we will go down for weeks? Well, we did officially just start in bear market territory. So if the NASDAQ and those types of indexes do start falling down below some of those moving averages, for instance, here's the NASDAQ weekly. Let's get rid of the 200 EMA. If we do break down below the 200 EMA, the only times we do that are in very bad markets, also known as the 2008 financial crisis or the 2000 dot-com bubble. Okay, what are you eating? You brought my slipper to me. Thank you. It's all shredded, but thank you. So those are the last 2 times we broke down below it, and both of those times were not very good. Now, I don't think we're going to have something like the dot-com bubble right now. The economy is still working out okay, everybody. America, we're a little bit stronger than other countries in economic fashion right now. Our businesses, our corporations are. And then, so that hopefully would mean the stocks don't crumble as much. But, dot-com bubble was bad. Recession, it was bad, but it wasn't terrible. I think what made this so much scarier was the financial crisis aspect of the recession, not the recession itself. That's when you see all the movies out there about the financial crisis. They're not about necessarily the recession part of it, where people are losing their homes. It's kind of like a little. It's like one page in the story for those type of movies. It's all about how the crisis occurred. Right now, we're not necessarily in a financial crisis because of all the regulations we put on corporations during that time. However, we did lay off on some of those regulations, so it did make everything a little bit. It may make things more risky. But I think because all these companies still have great cash flow, they have a whole bunch of money on the side, like cash on the side. They're doing buybacks and stuff like that to help themselves out. Main Street might feel some pain, but corporations won't be feeling the same pain as Main Street. But, since when have they ever? Dude. Okay, we'll play a little bit later. Let's see very fast, guys. And hey, Gavin, why do you think it broke upwards on the news? I think it was actually just following the stock market there. Because remember, guys, as the news came out, we initially dropped on the news. But what happened was we skyrocketed right after that one, because there's a lag in when the CNBC I see versus the CNBC you guys see on your TVs. We dropped, but then longs came in here and just obliterated the shorts, and that might have been a little bit of manipulation, but then you see the regular stock market was coming up too. So my thing is, I think they like the fact that the Fed gave guidance on what they're doing. Normally the Federal Reserve is saying, hey, this month we're doing this, and we'll let you know what's going to be happening next month. We're going to be keeping all of our options on the table. Now they kind of gave more guidance saying, hey, this is what we're going to do. So they added more certainty in the market, and that gave people enough traders, I wouldn't say long-term traders, but enough traders, enough reason to go long here and buy a little bit of a pop. Most of those traders are probably going to be out of their positions pretty fast, and that's why if you go over to the NASDAQ here, last 5 minutes, right? Oops, we came down, popped, but now we're eventually coming back down. It's going to cool back off here, right? It's going to cool back off. And he didn't say anything terribly bad during his press conference. Talking about Jerome Powell. That's going to be a good thing for us going forward, too. And hey, at the time, he should have went the full 1 point. That is true. That is very, very true. In my opinion, at least. Let's see. And hey, flat smack bear trap work good. Yeah, guys. I don't want to go too far into it. But yeah, once they shorted, there was a bunch of longs, like millions of dollars just destroyed those shorts there, and we just pumped back up. And it was crazy because we already had the new low of the week right here. We tried to make another new low at the speech. It just ricocheted off. So Bitcoin's definitely, you see Bitcoin altcoins coming up a little bit more than the regular traditional markets here. Okay. But okay, everybody. I'm going to take a little bit of a break. I'm going to be seeing you guys in about another 5 hours here, but I need to get my first meal of the day. I need to get some more water here because I'm out, and I need to take a look out to use the bathroom. He keeps on headbutting me with his nose on my arm, telling me that, hey, he needs to go use the bathroom. So I will see you guys a little bit later. Thank you guys so much for watching. And guys, relax. It looks like we're going to consolidate for a little bit more. Let's wait and see if we have another big move over the next few hours, and if we do, I'll go live, but most likely I will see you guys at 6 p.m. Pacific time or 9 o'clock Eastern. Thanks, everybody, and hope you guys have a good chill rest of your next few hours. You guys have a chill next few hours. Thanks.